Hello everyone, welcome back to the Road to Retiring channel. Today I wanted to go over the best free tools and websites to research stocks. Now if you like this kind of content, hit like, subscribe, let me know why you like it, and if you want to hear more about my potential buy values for stocks, then stick around and subscribe for future videos. But I want to start with the first website, and that is Digrin. Now this is really nice for dividend stocks specifically. As you can see here, it's starting on the dividends tab. You can see how their dividends have grown over time. If you want to see the actual numbers in a bit more detail, you can go down here. You can see each ex-dividend date, and it has any percentage change next to any details that have changed over that time period. And if you want a bit more of an overview of things rather than going into the details like that, you have this beautiful breakdown of the dividend growth rate over 3 years, 5 years, 10 years and 20 years on the side here, along with great information such as the dividend yield, the 5-year range for the yield, and the current payout ratio and how that range has changed over time. Additionally to showing this for specific stocks, it's also pretty good for managing a portfolio. Now I put my portfolio in here, and you can see sort of how your portfolio values changed over time. And I really like this tab, the dividend calculator, because it shows you what each stock is paying you each month, and I think that's just a really cool thing to see coming up. Additionally to this, you can see what paid dividends you've received, and you can see diversification, so you know what sectors that you're currently into, and it helps you break down things in this way. So I might look to invest away from communication services and technology, as it's such a large proportion of my portfolio at the moment. Additionally, I really like this performance statistics tab, I think it is. The statistics tab shows you exactly how your portfolio has performed each month in terms of percentage loss or gain, and this can be really good for just comparing how your portfolio has performed compared to the market in that time. And it also has a heat map to show the industries again that you're in and what your largest positions are. I really like Digrin, and this is for dividend stocks specifically. If you want lots of information on the sort of history and financials and numbers behind a stock, then Macrotrends, which is the second website I want to show, is fantastic. For instance, if you want to see how the PE ratio has changed over time, you can do that from 2010. You can see here the PE ratio and how it's moved over time, so that you can make a good opinion of you think it will be in future when you're using estimations. And not just for PE ratio, you can do this for all sorts. It has price of all the different ratios here, but then it also has revenue and profit. You can look at EPS, net income, revenue, you can look at all sorts, and it goes back over a long time, which is what I really like. Now the next website I want to show you is TradingView. Now this does similar to Macrotrends in terms of showing you the financials, but it doesn't go back as far. If it went back as far, I think TradingView would win out because the UI is fantastic. You can see annual overviews on the income statements, the balance sheet, the cash flow, earnings and revenue really quickly, all on one page. You can look at the forecast in terms of how the annual earnings are projected, how the annual revenue is projected, and what things are expecting to look like in 2026. Additionally to this, you can still see a dividends tab. Google doesn't pay one. That will show you how much it's paying in dividends over the years. And you just have all sorts of statistics. And in the balance sheet and cash flow and income statement, I really like the search bar here. If you're looking for something specific, you can just go to depreciation, for example, and then you can see the accumulated depreciation total or depreciation and amortization. You can look at all these things really easily through the search bar on the available through TradingView. So this is really good for getting information quick, and the UI is super friendly. I really like using this when researching a stock. Additionally, I like using Yahoo. Now what this has different to TradingView is when it's doing its analyst estimates, as you can look at the recommendation trends here and the recommendation ratings, it shows you exactly how many analysts have made each recommendation. So you can see strong buy and hold have been recommended by 13 strong buys for Google, 25 buys for Google, and 5 holds for Google. And what I like about that is you don't receive that on TradingView. Look at analyst rating, it just says strong buy. You can't see how many analysts that suggestion is based on. And if, for example, it's a really small cap stock with maybe only 2 analyst recommendations, then that strong buy might look really appealing, but if it's just one analyst that's reviewed it, then you want a larger sample size, and you can see that larger sample size, and you have that information available in Yahoo, which is why I really like Yahoo. And this is where I pull in my next 5 years estimate for earnings growth, which I think is really useful information to know what that estimate is. Now, Seeking Alpha is a fantastic one, however, it does have a lot of content hidden behind a premium paywall, but I still like a lot of the free content that you can see on here. So, for example, all of this locked stuff you unlock when you go premium, but it's still really good to see how the Google value compares to the sector median across all of these different valuation metrics, and how Google's 5-year average compares to the current value, because you might want to lift it if the 5-year average is potentially higher. And it has other useful information as well, such as earnings. You can have a look at some information, but if you want to go beyond certain dates, for instance earnings estimates, I'd love to see what these are valued at. Fortunately, you can't unless you go premium, which is something I am interested in. However, it's quite a lot, and for me personally, I don't think my portfolio is at a large enough size for an investment in something like this to make sense quite yet, but it is something I'll look into in the future. And finally, the last tool, or it's not a website, but it kind of is Google Sheets or Excel. Now, in here, this is where I pull in loads of information, and you can obviously do this yourself, but if you would like access to my sheet here, then there is a link to my Patreon in the description. You can get this for as little as $1 a month. It's completely up to you what you pay, as long as it's above $1 a month, and it's more of a tip to really than an actual payment for it. But yeah, so I've set this up to pull in information from all over, and this shows the equity growth from 2016 to 2023. You can see all of that for Google. This shows you how the total compound annual growth rate in all these metrics. It also pulls in the long-term debt and free cash flow. If I was to change it to Apple, for example, you can see how this would differ and how their growth rates compare. Unfortunately, I can't pull in the return on invested capital, as the sites that I use to pull this information from don't have don't have the return on invested capital available, unfortunately. So at this point, this is when I would go over to TradingView. I would look at the financials, and I would find it in the statistics, and once I see return on invested capital, have a look at what the average value is. That's then when I would input that. So that's available there. You can then, as you put in Apple, you get an automated sort of valuation based on historical metrics, and that can give you average fair value. You can see for Apple comes in a minus 14% right now. We would have changed that to Google, then you can see how that price would change in the automated sheet. Comes to $153 as the average fair value for Google, which is 70% currently above the buy value. But what's really important when you're looking at these is go into the manual input, change all of these values, because lots of these won't be realistic. For example, it uses the revenue growth rate, which was historic, so 18.05%. That was the historic revenue growth rate, which is here. Obviously, that's not expected in the future, so you've got to change these values, and all of these values that are highlighted in yellow, the ones that I recommend you change. But if you change this, for example, if you wanted to see how a 5% earnings growth rate with a 20 PE multiple would perform for Google, then that shows you that the PE fair value would be $80.61, and I think that this is really useful for getting sort of quick valuations on your stocks. Obviously, you should go into a bit more detail, change your margins of safety, change your share dilution. There's a lot more than just typing in random numbers. You want to make these estimates based on factual information that you look at from these sites, or for example, that I pull in from. You can see this Analyst 5-year estimated CAGR sitting at 15.51. That is what comes in from Yahoo, as you can see there. So this is using information that's available elsewhere, but just sort of collating it all into one place. If you want to do something like that for yourself, then I'd highly recommend doing that. Obviously, I created this, and this is free to set up Google Sheets yourself. But if you do want access to this specific sheet and all of my buy values for my different stocks, then that is available through the link to my Patreon in the description, which I've already mentioned. And they are the 5 or 6 tools and websites that I like to use value stocks when I'm researching. And if you have any others that you recommend, or if you're just have a bit of interest and not want to ask any questions about any of these, let me know in the comments. I'd be happy to get back to you. But for now, it's been Road to Retiring. I'll catch you in the next video. Bye guys.